Time for some Project Economy news, and we're keeping a close eye on Wall Street today. The Dow Jones Industrial Average is down 61 points, but this is after dropping over 600 points over the last 3 days and 300 points, more than 300 points yesterday. And at one point, the Dow was actually down close to 1,000 points, which was the biggest single-day drop. And joining us this morning, as they do every Friday, is our economist from the University of Hawaii's Economic Research Organization, and today it's Professor Sumner LaCroix. Professor, thanks so much for being here. A little too much excitement on Wall Street yesterday. Close to 1,000 points the Dow was down at one point before rebounding.
A little too much excitement.
Yes.
And the plunge was really quite fast. Trading stopped in some stocks for a while. We still don't really know what went on during that period where it just kind of plunged. But I think we need to put the market news in perspective. Most of it is probably not emanating from the U.S. There's some uncertainty about the financial deregulation bill, which is going through Congress. That bill is going to have a huge effect on the financial industry and whether or not their stocks go up or down. And so people are closely monitoring that bill, and they're looking closely at the provisions that are in it. That could have been driving some of it. But the crisis in Europe over Greece is a big deal. And it's a big deal because Europe is a big export market for many U.S. firms. And the euro is a big world currency. Because Greece has had problems paying its debts, it's basically said we're insolvent, we really can't pay. There's been a huge bailout package, all fine and good. But now there's worries maybe Portugal can't pay.
That's right.
Maybe Spain can't pay. Maybe down the road Italy can't pay. And that would be the ruin of the European that would be the ruin of the European Union. And that would be a huge impact on the world economy. So right now, though, there's just a lot of worries about, okay, are Portugal and Spain going to be next? Because once we start seeing a weakening of the European economy, tons of bailout packages, that means essentially slow growth in Europe for a long time.
And let me ask you this now. It's happening in Europe, and yet it's going to be hitting us here in Hawaii. Of course, the European Union was formed. They went under the UHERO. Now, and with hindsight being 2020, was that maybe a bad idea? Because if it was just Greece going under, it wouldn't be bringing the rest of the European market with it, would it?
Well, the European Union is a great idea. I mean, it's essentially creating a free trade zone in Europe that's very similar to the free trade zone in the United States. That's one of the great virtues of the U.S. economy is that you can take a product that's made in Maine and sell it here in Hawaii. You can take a product in Hawaii and sell it in Maine. Having a big free trade zone means a big market, and big markets mean that people can specialize, and specialization means higher incomes. And that's why Europe has done really so well, I think, in that period since World War II. But on the other hand, if you're going to have a big integrated market like this, there has to be some controls on the people who are participating in the market. In the United States, for example, each one of the 50 states has to have a balanced budget. In Europe, that's what the agreement basically says, is that each one of the states has to maintain something close to a balanced budget, but they haven't, particularly states in the South. The Mediterranean area has been a little bit more fiscally profligate. Right. Northern Europe, there's been better fiscal policies, better budget balance.
And it's amazing that something happening in Greece could end up affecting us all the way across the world here. But that's the world
we live in right now. That's the integrated world. That's what we should expect.
Professor Sumner LaCroix, thanks for being here. We really